9 weeks left in the year, and this week could decide how 2025 closes.
Yeah, it's a huge one. We've got the Fed's rate decision, fresh headlines from the US-China trade talks, and big tech earnings, all landing within a few days.
Basically, every market driver on the planet hitting at once.
Before we dive in, quick note. Everything here is just our opinion and analysis. It's not financial advice, not a trading signal, and not a call to act. This is for education and entertainment only.
All right, let's set the stage. Over the weekend, negotiators from the US and China confirmed they're closing in on a new trade framework, something investors have been waiting years to hear.
And midweek, the Fed is expected to cut rates by 25 basis points, the second cut this year.
That's normally bullish for growth stocks, but it also means markets are pricing in perfection. If Powell sounds even slightly cautious, things could flip fast.
Exactly, the market's hypersensitive right now. One wrong word and sentiment changes overnight.
Meanwhile, the Fear and Greed Index is still stuck around 33, deep in the fear zone.
Which is crazy, because we're sitting near record highs. It's a bull market that doesn't feel like one.
Last time that index stayed under 35 for 2 weeks and then turned up, the S&P 500 jumped about 6% in a month. Fear can actually be rocket fuel.
And speaking of fuel, big tech's about to pour gasoline on the market. Meta, Microsoft, Alphabet, Amazon, and Apple all report earnings this week.
Those 5 companies basically are the market now. Their combined free cash flow beats the annual budget of several countries.
If they crush numbers, we could see a year-end rally. But if even one misses, buckle up.
Let's look at how they're doing so far this year. The Nasdaq's up 22% year-to-date. Microsoft plus 27, Amazon plus 3, Apple plus 6, Meta plus 29%, Google plus 39.
That gap tells the story. Investors are rewarding AI and ad growth, not hardware or retail.
And it's wild how concentrated the gains are. A handful of stocks are carrying the entire index.
Now for the charts. The S&P 500's trading right around 6,858, holding just above that key 6,700 breakout zone and inching closer to the psychological 7,000 mark.
Exactly. Every dip near 6,600, 6,700 keeps getting bought up. Buyers are clearly defending that area. And as long as we stay above 6,850, momentum looks healthy. Not euphoric, just steady.
It's that quiet pressure before a big move. One headline, one earnings surprise, and we could see volatility spike fast.
Amazon's been flat for months, hovering near its 150-day moving average. Apple's hot, about 20% above it. Meta's back at its February highs. Google's printing new all-time highs. Microsoft is tightening up under 530. A close above that could send it into blue sky.
In short, the market's loaded. One spark, and it moves hard in either direction.
Now, where could the next wave of money come from? Money market funds are sitting on $7.3 trillion in cash, the highest ever.
If even a fraction of that flows into equities, it could fuel a serious rally. Add in cooling inflation, steady earnings, and AI spending, and the setup looks strong.
Still, one thing could ruin it, if even one of these giants fails to deliver.
Right, we've seen it before. Optimism flips to panic in 24 hours. Meta and Google look solid. Apple and Amazon have the most to prove.
So this week isn't just another earnings cycle. It's the week that could define 2025's tone.
Big picture, fundamentals are improving. AI investment keeps expanding, liquidity's rising, and global trade tensions cooling.
The fear is real, but the potential upside is even bigger.
So, to wrap it up, the Fed, big tech, and China will write the market's story this week. We could see fireworks in either direction.
If you found this breakdown useful, hit subscribe, turn on the bell, and stay tuned for our live coverage of the results.
And remember, this is just our opinion, not financial advice.